Hi friends, today in this lecture I'm going to discuss the second basic aspect of materials control, which is control over the investment in materials. On the top of the board you will see the little summary of what we discussed yesterday, which is A, physical control. We discussed that physical control, for physical control of the material, the company must have set up something called limited access. There should be segregation of duties and record keeping. Today we are going to discuss the investment control, which is part B on the board. Now, maintaining an appropriate level of raw materials is one of the most important objectives of material control. The company should target at keeping the inventory levels as low as possible. Because funds invested in inventories are unavailable for other uses, management should consider other working capital needs in determining the inventory levels. And also, higher than needed inventory levels may increase the possibility of loss from the damage, deterioration, or becoming obsolete. Planning and control of the material investments requires the following 2 points to be kept in mind. One is called order point, other is called economic order quantity, which is EOQ. It is very important for a company to know when to order the material. And the other question is how much to order. In today's discussion, I'm going to be emphasizing when to order part of the order, and in the next class we're going to discuss the order point, economic order quantity, EOQ. So in order to calculate the order point, 3 things should be kept in mind: the usage, lead time, and safety stock. First of all, what is order point? Order point is a point when the company knows when the material should be ordered. It's the point at which the material should be ordered. On this side of the board, I have given some definitions of the terms. The first one is usage. Usage means anticipated rate at which the material will be used. The company has to set up this point, or after 2 or 3 operations, the company is going to come to know what is the usage rate of the company. Lead time. Lead time is the estimated time interval between the placement of the order and receipt of the material. And the third one is safety stock. This is the estimated minimum level of inventory needed to protect against stockouts. What are stockouts? Stockouts means out of stock. Before getting out of stock, what should be the minimum level of inventory that should be in the safety stock? Now, the level of inventory in the safety stock could be inaccurate. This estimated level could be inaccurate if the usage that was estimated was inaccurate, if the lead time is not right, and there could be other unforeseen events like the order that was placed was the material that they received on the order was wrong, or it was damaged, or it was of inferior quality. Now here I have an example of how to calculate the order point. How does the company decide when to order? Again, three things should be kept in mind. Now let's say that the company expected the daily usage of material to be 100 pounds or 100 lb, and the anticipated lead time is 5 days. It means from the day the order is placed, it's going to take 5 days for the company to get the order. So this times this is what the company needs to be in the daily usage warehouse. For a little more detail, the company placed the order on Monday, and the company knows that it's going to take 5 days for the order to come back, for them to receive the material. So from Monday to Friday, there are 5 days. The company is not going to be closed for these 5 days. The work is still going on. So the company must have material in hand to work on these 5 days. So 100, the estimate is that every day they use 100. So total of 500 should be in hand. Total of 500 should be in hand. Plus there should be something also in the safety stock. What if the material that they ordered they didn't receive in 5 days? It got late. It's going to take 3 more days for them to receive the material. How are they going to work during those 3 days? They're going to take out the material from the stock for those 3 days, which is 300. So there should be sufficient amount of material in the safety stock. So if any mishappening happens, the work should keep going on. So that's how they calculate the order point. 100 lb every day, 5 days is the lead time, and desired safety stock has to be 1000 lb. So 100 times 5 is 500 plus 1000. Total is going to be 1500. So when the inventory has reached the minimum level of 1500, that is the order point. So we have discussed one part of investment control, that is order point. In the next lesson, we are going to discuss economic order quantity, which is how much to order, and the short form is EOQ. See you in the next lesson. Thank you.